Hey, good morning, everyone. So this is our weekly market wrap. So on our weekly market wrap, we use a top-down approach. So we look at all the major market indexes. We look at the S&P 500 sectors. We look at gold, silver. We look at the dollar. We look at crude oil. We look at natural gas, interest rates, volatility, and then we look at the Magnificent Seven stocks, and that's really a recap of what we do on the weekly analysis. So we all start with a top-down approach. That's what that's called. We use a one-year chart and we use a weekly candlestick. So that's what this is today. Just a recap of the market action from last week. And then from here, once we have our weekly market posture, our posture is either up, down, or sideways. Right now, we know the market is up, so that's our posture. With that said, as we look at the charts today, we'll see that there's a possibility we might have a pullback now for a week or 2 weeks or 3 weeks or 4 weeks. Could be longer, could be shorter, and we may not have any pullback. But I believe there's a good chance we'll see a short-term pullback, which would be good. That would create some good opportunities to get in at some lower prices and take advantage of the next move to the upside. If the market moves to the downside and reverses and we turn into a downtrend, then we'll have opportunities to trade that direction. But right now, the direction is still up. So, in any event, we'll start with the indexes. The first one up. A lot of times when you listen to the news, they talk about the market. They're referring to the Dow Jones Industrial Index. That doesn't really represent the market. That's only 30 stocks. And usually those are mostly mature companies that are not growing very fast in terms of their sales, their earnings, and their profits. And so, we don't look at the Dow Jones as the gauge of the overall market. We look at the S&P 500. Those are the largest 500 stocks traded on the New York Stock Exchange. So first up, we have the SPX index, S&P 500. We can see that we're on a super strong trend. If we're looking at the one-year chart, we see that back in December it hit this high at 6,099 area, 6,100 area, broke out of there in June, and pretty much gone straight up except for 1 week where we had a pullback in July. And then this week we see what's called a bearish harami or a doji. That looks like that's an indication we might see a pullback. I hope we do. Honestly, I hope we see a 2 to 4 week pullback to where we can get a higher low somewhere above the low here from July 28th, and then have an opportunity to re-enter into not only potentially the SPY, which is the ETF for the S&P 500, but also stocks that are going to present similar opportunities in what we call a bull flag setup. So a bull flag setup is when we have a security that's trending up, making higher highs and higher lows, and then when it does pull back and give us a higher low, it gives us an indication that there's what we call a setup. That's what the chart looks like just before the potential entry signal. And so in any event, that's where we are on the S&P 500. On the Nasdaq Composite Index, very similar. We have a bearish harami candle here, a doji. The harami means that the body of the candle, that's where it opened and where it closed on the week, is inside where it opened and closed on the previous week. So that's a bearish candle. We could go up from here. We don't know, but it's an indication we might see a pullback below the low of last week of 24,186.37. So I'm hoping again that we have a pullback so we can get some, get in at some lower prices. Nasdaq 100, that's the 100 largest Nasdaq stocks. We can see that it pulled back this week to a higher low. It's higher than the low we had back on July 14th. Not by much, but by about 16 cents. And but this is more of a 7-week pullback. So this is not really a bullish candle per se, but if the market does go above the high here, 90.42 of last week, that would be an entry to trade back up to the close here at 98.65, and then potentially higher, in terms of what a breakout target would be. So Again, this is a little bit weaker than the overall Nasdaq Composite, but still technically a bull flag setup, but not really, as bullish as I would like to see on the candle. So if I see a candle like this one down here, that's much more bullish. It's closed higher than it opened. The close of this closed above the halfway point of that bearish candle in the week preceding it. And so that's more of a bullish setup. This one here was a bullish setup that had a long tail hammer, it's called. And, that was a lot stronger. So this one closed close to the low of the week, so not as exciting. The Russell 2000, we can see that last week, not last week, but the week before, the week of September 15th, we made a higher close on the Russell 2000 index, closed at 2448.77. The close here was 2434 back in November of last year or so. This was a long-term breakout, did not follow through last week. It's indicating there's a little bit of weakness, but we'll see. I mean, this might go up from this week. You could enter if it closed above, or if it goes above the high from the close of last week at 2448. You could get in and make a trade. Now, you wouldn't trade the index, but you would trade the IWM, which is the exchange traded fund for the Russell 2000 index. And so an ETF, an exchange traded fund, is a mutual fund, but it's a closed end mutual fund. And so it trades just like a stock. But anyway, so that's that. The Dow Jones, we can see it broke out of these highs here, broke out about 6 weeks ago. Tested the breakout. It slowed down the week after the breakout, a little bit of a bearish type candle, pulled back and tested the breakout area, and now it's moved up for since that low, it's moved up 3 straight weeks. But again, it's moving very slowly. It tells me there's we might be in for a larger pullback. And then last index we look at is the VIX. That's a volatility index. Overall, we're very low on volatility. But as if the market does pull back, we'll see a spike in volatility, and we're at very low levels. Anything below 25 or so is fairly low, especially 20. But when you get above 23, 24, I'd have to do some more analysis on this, but then that would indicate a potential longer term pullback. But right now the volatility is extremely low, and the VIX is the Chicago Board of Options Exchange Volatility Indicator. It tells us how volatile the S&P 500 index is, or those stocks. So that's that. And then next up, like I said, we look at the sectors. And so we'll start with the XLB sector. Those are basic materials. We can see that we're going sideways here ever since this breakout here back in June. It's pretty much sideways. And so until it breaks out of these high areas up there at the 92 area, it's not too exciting to me. We will have some target at 95 and then at 98, but again, not too exciting today, but it's going sideways. Technically, if we look at the 1 year trend, it's important to note that this is actually on a 1 year downtrend because it closed here last September at 95.17. This week it closed at 88.84. So the long-term trend is down, but if we look at the low here back in April, from now, the intermediate term trend is up, but now sideways for the last 2+ months. So, not too exciting today, but that's where we're at on that index. Communications, strongest sector out there. That's a hanging man. And so, it's an inside candle, also a bearish harami. It doesn't matter what you call it. It indicates that we're going to see a pullback. And so I'd love to see a pullback to this first yellow line, the 111 area, or the 108 or 109 area, or all the way back to the 106. We'll see what happens, but when it does pull back, we'll get a good opportunity to re-enter once we see that bullish candle and we see a bounce off of support. So that strong energy, on the 1 year basis, still down slightly, but it's close now to sideways because it closed a year ago at 93.18 and just closed last week at 91.99. So headed in the right direction since the lows back in April, but still has some overhead resistance here. So that's that. The financial sector extremely strong. Typically, as the financials go, the S&P 500 goes, and we see the breakout here of this level of the 52 area. We saw that breakout in February, but then it didn't really do much. Ended up pulling back all the way to these lows here in April, and then waited all the way back to the breakout area. Broke out again on this candle. That was a new high close in June compared to the high close back in February. Pulled back, went up a little more, pulled back, went up a little more, and now it's kind of sideways for four weeks here, or so 5 weeks. So it's consolidating these gains. With interest rates going down, we can expect to see financials do well. Banks make more money when we have lower interest rates because it's easier for consumers and businesses to borrow money. The cost of that money is cheaper, and so the financials do well. And so there's going to be some opportunities here, but again, not too exciting to me, just because we're consolidating sideways. I like to get in when I see a nice, healthy pullback, and then get a good target to the upside. So that's that. XLI sideways, as we can see, for about 10 weeks now. And so not too exciting today from a trading standpoint, but we'll see how it develops. Technology, we can see here that this was a resistance area starting back in December, the 242 area, and broke out of that finally in June, and 242 up to the high this week of 282. That's a 40-point move in 3 months. So that would have been a nice setup right there for an intermediate term type trade. But we can see it went up, made this high close here back in August, pulled back for 2 weeks, gave us a nice bullish setup right here on September 1st, and has gone up and made some headway over the last 3 weeks. So an entry above 265 went up to 283. That would have been a nice 18-point move, but now it's indicating some slowdown here potentially. Still a bullish candle. The close the week before last was 278.56. And so this was slightly higher, 278.84. So not too much, but technically a higher close. So again, I'm looking for a pullback. That's what I'd like to see. Staples, we're at some support lows. 1 year downtrend, not too exciting. Real estate, not too exciting. Utilities, obviously with interest rates going down, utility companies do better. It's a new high close, so that's a strong area right now. Utilities, healthcare, recent a 1 year downtrend. It did break out to some new highs here above this moving average line, but then has since pulled back. So we'll see. Not too exciting from a trading standpoint. XLY, consumer discretionary, we see 2 weeks ago we closed at 238.63, which was higher than the close back in December of 235. So we made a new high close, went up higher the following week, and even closed higher that week. Pulled back, and now it's a bull flag setup. So if it goes above the high of this week, 242 area, then we have some nice targets to the upside. So again, you always have to look at your time frame. So I focus mostly on swing trades. But, there's some opportunities here. We'll use the Fibonacci retracement tool to give an idea of some upside targets. So, I'm going to go all the way back here to this high right there. I'm going to measure from that closing price down to the closing price here in this candle. And, then we'll take a look at the upside targets. So, this is from December of last year to September of this year. So this is an intermediate term to long-term upside target. But you're looking here, if you got in, above this week's high of 242, you could trade all the way to 290, 272, 295 is a breakout target. That's basically the distance from the high over here down to this low over here. And then we add that to where it breaks out. That gives us the breakout target. So, just consumer discretionary in this market, discretionary companies are ones that offer products and services people are buying. when the economy is doing well, and so obviously the economy is doing fairly well, and if the Fed continues to cut rates, we're likely to go in that direction. But the market can change. We can have geopolitical events, something unexpected could come into the market and change the trajectory. But right now the market's still up, and so this would be a good trade setup for an intermediate term to long term type trade. If we move from 242 up to 295, we're looking at 53 points divided by 242. That's a 20% move. If you're using option contracts, you might see a 200% rate of return on your money in 9 to 12 months, or less. And so, that's the power of options. That's why we use option contracts. Now, again, this is not a recommendation to buy or sell any security. We're not investment advisors. We're just educating people on different opportunities and setups. And so, as part of our service, once it's officially launched, we'll put on paper trades and look at setups where we can practice our trades. You'll see some results on the effect there. But our focus on anything we do, bottom line, is starting with this top-down approach, analyzing the market each week from a top-down perspective, then looking for setups that are trading in the same direction. The beauty about technical analysis is that you can combine it or use it, I should say, on any time frame. So if you're a day trader, you can use it on the day trading time frame. If you're a swing trader like me, 2 to 20 days, you can use it on that time frame. If you're intermediate term, up to 1 year, you can use it on that time frame. If you're a long-term trader, investor, whatever you want to call it, same thing. And so the other thing is with technical analysis, it applies to all different types of asset classes. So you can use it to trade options, stocks, Forex, futures, crypto, whatever you want to do. You can apply the same concepts and principles to any security type. So that's the beauty of technical analysis. And, while we're talking about technical analysis, let me just say that, technical analysis is based on 3 core tenets. Number 1, prices move in trends. Number 2, market action discounts everything. And number 3, history tends to repeat itself. So when we're using technical analysis, we're not listening to what people tell us. We're listening to what the charts are telling us, because charts don't lie. They tell us exactly what's going on. They tell us where the smart money is putting their money in, and see. My job then is to follow what the smart money is doing using specific trading plans, and then putting in conditional orders with stops and targets in place, managing my money well, and then just doing that. And then when it comes to options on stocks, then we can combine that with fundamental analysis, which we do, and we can from there look at the strongest of the strongest or the best of the best. So and so anyways, that's that. We're moving on from sectors. Let's go over to crude light, downtrend on the 1 year basis, but this is one positive thing here. If we look at a shorter time frame, we would see that from May, as an example, we're on an uptrend, right? It closed here back in May at this 59.16 level, just closed last week at 65.72. That's an 11-point move, so it's trending up. And it broke out of this high of this candle here of 65.28. This week closed at 65.72, so that's a breakout. And now it's technically a bull flag setup, a 1 week pullback. So you could get in, above this high of 65.40 and trade up to these higher targets of 68 and then the 71 area, right? And then when it breaks out from that, then we have some nicer targets to the upside. So that's that. Gold, obviously, it's on fire. I think I highlighted this a couple months back where we had an entry on this bull flag above 34.23, and it's gone all the way to 38.46, and so right now getting in on this is chasing it. But this shows you where smart money is going. This shows you where the institutional investors, the large banks, are putting their money into, from not only the U.S. here but large banks overseas. So there's a reason. Gold and silver are hedges against inflation, and so you can trade the exchange traded fund on gold. You can trade the futures contracts. You can trade it a lot of ways, but there's nothing I don't think there's a substitute for having some of your money in physical gold. And so, that's something you might want to consider as well. So that's gold. Looking for a pullback on that to a higher low. I'd love to see a pullback to the 35, 36 area and get some nice targets to the upside then. Natural gas, we're at some lows here. We had this low back in November of last year at $3.40 of a close. Last week we closed at 317, so even lower. So, once it does reverse, there'll be some opportunities, but not exciting today. Silver, just like gold, just been on a huge move to the upside. I highlighted this also a few months back, and we can see what happened. An entry above 39 would have got you all the way up here to 40, 47, 41. That was a huge move, 20% move, and just under 3 months. And again, if you own the ETF, a 20% move in 3 months is good, right? Way better than the average of the market over the last 90 years, right? But if you own the options, a 20% move on this would have been maybe 150 to 200% move on the option contract. So, so that's why I love options. I mean, you get leverage, and if you're buying the option contract, the worst case is you lose what you invested in it. So that's the worst case. So, in any event, this is a kind of a bearish candle. It's bullish in that it did close up, and it is, a higher close on the week than where it opened. But it's got a long upper wick here, which indicates there's some resistance, there, and that's not surprising. The all-time high, I believe, is $50 on silver. So we might go up there and pull back. We might blow right through that, but I'm just praying for a break below the low of 46.27. I'd love to see it come back down here to the $40 area. Based on the strength of this, probably unlikely, but it's possible. But again, if the market itself pulls back the stocks, then we would expect silver and gold to do even better. So, we're going to have some kind of a pullback likely, maybe this week, maybe next, maybe in 3 months. But whenever it does, it's going to give us an opportunity to get in, and so we'll look for that. And if it does just go straight up here to the $50 area, then we can look at a longer term chart here. Longest here is a 20-year chart. So let's look at that. So we can see it's way above the 20, it's at all-time high in the 20, but money's been pouring in there. If you would have got in above this high over here, like we said, you'd be looking nice, doing well right now. So in any event, some new opportunities will come. This is a contract on the futures contract on short-term interest rates, a 10-year note. Bull flag setup. So this shows interest rates are likely going higher. Or bond prices are going higher, I should say. Interest rates come down. There's an inverse relationship. So, that's good. That bodes well for businesses, for consumers and businesses, which bodes well for the market overall. And, so that's that. And then the dollar, obviously, we're at some lows here. We'll go back to the 1 year time frame. And we're had a close over here a year ago at 26.87. Closed this week at 26.43. So it's basically 1 year sideways. If we do see a break above, well, that's actually a higher close last week compared to this close here. So we still have this higher close here at 26.50. So if we see a break above 26.50, then we can be looking at the dollar getting stronger. So, but we'll see. Time will tell. But that's that. And then we're going to look at the Magnificent Seven. These are the 7 largest Nasdaq 100 stocks. Apple is one of them. Looks like a new high close. Let's see. We closed back in December at 255.89. Closed at 255.46 last week. So we're 13 cents below that. It looks like, or something like that. This is a breakout setup. So if it goes above the close here at 255.59 or the high of that week, 260, then we see some nice targets to the upside on Apple. And so, that's going to be a nice little setup here we're going to want to take a look at. But again, if the market pulls back, this is likely to pull back, but there are exceptions, 70% of the stocks will pull back when the market does. The other 30% will, outperform the market and go up. Amazon, sideways for the last 8 weeks or so, was not able to break the highs from January of this year, and so it's a bearish candle this week. Not too exciting. Google, super strong, but I like what I see here. I like seeing that pullback after this breakout of this, 207 area. We've seen it go up, hit the first target at 241. Went through there, almost made the breakout target at 264, but then pulled back and tested this area. So a move above 256.31 is a resumption of the uptrend. But I'd like to see a pullback here. I'd love to see a pullback down to the 210 area, and then we have some nice upside targets. So Meta, sideways right now. Microsoft, sideways to down over the last couple months. So that's that. Nvidia, strong. I like it. Horizontal breakout above the high of 183.88 area. And so if we were to look at a potential target on that, I really like Nvidia. Obviously, there's a lot of money coming into it, and it's super strong. We can tell that by the chart. But if we were to measure from the high up here, that closed down to, let's say, the low over there, looking at a potential target at 199.95. So, again, an entry above 184 area gives you a 16-point target to the upside. Might have some resistance at 193. But anyways, that's a potential setup right there. I like that. So, but again, if the market pulls back, expect this too, and we can see from the long upper wick this week that there's still resistance in that 184 area. So, but it's super strong. Tesla. Another beautiful setup we had a couple weeks back. It broke out of these resistance areas at the 355 area. Blew right through that breakout area, went right to the first target of 391, then hit the next target here at, the 436 area. So, this is an opportunity we could have taken advantage of, and this is something we're going to be taking advantage of as we move forward. A move from 355 to 436. That's a close to a 25%. It's actually probably a 30% plus return right there on the stock. But if you own the options, if we use a factor of 10, not that that's an exact science, it's different on every stock, but 300% return in 3 weeks, who wouldn't take that? So expect to see these kinds of opportunities as we move forward. And as you can see now, as we look at where it kind of stopped out at, it is a higher close. So it is technically already a breakout. So I would, look at this, again, we're not giving investment advice, but the entry is above 444.98. But you can see that it came up to this previous resistance of December of last year, and then it's slowed down slightly. But I'd love to see it come below this low of this week, 419, and give us an opportunity to get back in and trade up to the upside and higher. So, but again, this might just break right through and go right to that next target. And 70% of the breakouts make excuse me, what's called a return move, meaning they come back to this 440, 436 area. So they might go up to 445 and come back to 436, and then we get in on a bull flag. But 30% don't make a return move. So that means that they go straight to the target. So, so those are things to be aware of. And then we're going to wrap it up here with just a few of the ETFs. So the DIA, that's the Dow Jones Industrial Index, the way to trade that. I'm using that ETF. EEM are emerging markets. Again, that broke out, made some new highs here, but then, it's given us a bearish candle this week. Would love to see a pullback on that. FXI is China, indicating a pullback. It broke out of these highs that we had. We had a high close back in March at 37.66. Broke out of that here in July. 1 week pulled back, started going higher again, made a new high, closed last week of 40.93, and then pulled back 1 week. So That's that gold. That's GLD. That's way to trade the commodity gold using an ETF. IWM is a Russell 2000. So if you wanted to trade that index, that's that. Again, nice setup there. That's high close last week, but potentially we're going to see some pullback. We'll see. Silver, that's a way to trade silver. So again, I want to see a pullback on that before I get in. Right now, I'm not going to get in. I would be chasing it. Spiders, that's the S&P 500 ETF. We can see that it hit not only the breakout target up here once it did break out of 641, but it went higher almost all the way to 669 to this next target up there, the 2.618 Fibonacci extension. So that's that. Then we have oil. If you want to trade oil, that's UCO. It's more leverage, so you get a better return on the upside than the USO, which is also trading oil. But again, I want to see a breakout on these highs up here. Once I see that, then I would look at entering this, from a longer term type perspective. And then volatility, we can see is at a low. So this is our top-down approach. The bottom line is it's up. So now we would look at daily. We look at specific setups. Our focus is the Nasdaq 100 list. We also look at the ETFs, and then we look at other industry groups that are on fire or doing very well. The strongest industry groups. We look for the strongest stocks within those groups. We see what the institutions are doing. We track the fundamentals on those. And then if we have a good setup based on the fundamentals and technicals, then we have other opportunities outside of the Nasdaq 100 list and the ETF list. So stay tuned. A lot of good stuff coming down the road. God bless.